If you are planning or considering to sell your Amazon business, watch this video because here we will present a couple of important questions you should ask the potential buyer. Our guest today is KUBEC from Thrasio company, and he will share these questions which would help to avoid mistakes other sellers were doing when they were coming into agreement to sell their businesses. By the way, if you would like to sell your business to Thrasio, we would be happy to introduce you directly to them. Please write an email to us at team@orangeklik.com. You will find the email below in the description, and we'll be happy to introduce you. This video is hosted by LISETT LEES. She works with different Amazon businesses. And before you watch the conversation, don't forget to subscribe below to the YouTube channel of Orange Klik. Click the notification bell. Also, click the like button. Because here we talk with different Amazon experts and software creators.
Hi Ken, it's nice to have you here on Orange Klik channel today. Could you please introduce yourself and tell us what you do in Amazon space before we dive into today's topic?
Yes, great to be here. So Ken KUBEC, VP Acquisitions at Thrasio. Thrasio is the leading Amazon FBA acquirer globally. To date, we've acquired well over 100 Amazon FBA brands, starting at the end of 2018. So my team runs the front-end acquisitions, everything from building and creating the acquisition funnel to negotiating terms and signing of the term sheet. I've personally looked at probably 5,000 Amazon businesses over the past 2.5 years, and very well versed on what makes a successful Amazon seller, what a healthy business looks like, and the acquisition and exit process.
Okay, and today about which part of acquisitions we are going to cover with you?
Yeah, I think there's the market is very dynamic right now. So today we're going to be discussing questions sellers should be asking when they're looking to make an exit of the buyers. Marketplaces are two-sided. There's always the sellers and buyers, and both sides are growing. And it's important for sellers, I think, to be armed with the right questions and thought process to have a successful exit.
Okay, sounds good, because selling Amazon businesses is really a hot topic right now. So we are ready to hear what you have prepared and want to share with us today.
All right, so as I said, it's a seller's market. And today we're going to be discussing what are the top questions that sellers should be asking buyers in the market. So with Thrasio's vantage point, as I mentioned, I've looked at over 5,000 Amazon businesses. We've acquired well over 100. We were pioneers in the Amazon FBA acquisition space. So we have a great vantage point of how we look at businesses, how we look at the market, and the history of the acquisition market, which is starting to hit, I would say, an inflection point. In two years ago, our deal pipeline at Thrasio maybe had a handful of acquisitions that we were assessing, and today it's 15, 20 times that. As I think the two-sided market, right? You have buyers and you have sellers. There's obviously been a massive influx of capital into the market on the back of our success. We've raised well over $1 billion worth of capital. I think there's an additional $1 billion that's been raised in the market over the last 12 months. And also from a seller standpoint, there's no better time to look at exiting your Amazon/e-commerce business, given the strength that most sellers saw throughout last year due to the global pandemic and supply chain, issues, as well as the movement to e-commerce and market share gains, right? Estimates have it that in Q2 and Q3, 4 to 5 years worth of e-commerce versus old line retail market share gains were had. Not that some of that has reverted as economies are starting to open back up, et cetera, but we think a lot of that will continue to hold and accelerate as we move forward. But I think it's important to realize that there are two sides of the market. So everybody sees the headlines of all the capital that's coming into the space, and sellers probably think, wow, there's a lot of opportunity out there looking for Amazon businesses, and multiples should go up and prices should go up. I mean, we've seen a steady rise in valuations, but I wouldn't say that they've gone up 50% or doubled by any means. And part of that is because of the supply. And there are a lot of sellers now that are looking to exit. As I said, I mean, we have more deals in our pipeline than we can conceivably acquire, to be honest, and it's growing every day. I mean, we're getting 3 to 5 inbounds on a daily basis of sellers looking to exit. And I think part of that is, COVID sales really started to accelerate in March of 2020. And, so most deals are valued on a trailing 12 months profit basis. And we're starting now to comp up against those strong COVID numbers come March and April of this year. So I think a lot of sellers are going to be looking at their P&L, and the top line is going to start to show actual year-over-year deceleration of the business. And that's, if you start to show that you're now negotiating from a point of weakness versus a point of strength. So I think there's a lot of sellers that are looking to exit and have the conversations before they really start to comp those. So it's a very dynamic marketplace right now, which is exciting to be in the middle of it from my standpoint, my teams. So, I think it's important when sellers are looking for an acquisition partner. These are partnerships. Despite being a transaction, we don't view them that way, and we don't think sellers should either. So there's a few questions that I'm going to go over that I think it's important for, if you are selling your Amazon FBA business, you should be asking and focusing on the answers and the validity of the answers. The first one is, how many acquisitions have you completed? So the way that most deals are structured in this space is you have a guaranteed upfront payment. You have, what's often referred to as a stability payment, which is a modern day seller's note, and then you have performance payments or earnouts. And this is the most important piece of the deal in my mind, because this is where the buyers are going to separate themselves. And the earnouts are typically structured in profit shares, and the profit share is based on growing the acquired profit base. So if we bought a business that was doing $500,000 in trailing 12-month profit, our deal, which would have an earnout structure that would say, every dollar over $500,000, we're going to give you 50% of for a period of up to 2 years. It may be less than 50%, but it typically peaks at 50%. So you can see why now, how many acquisitions have you completed, and what's the track record of those acquisitions can be, very important in your decision process as a seller in who you want to sell your business to, right? It's also, there's a lot of mechanics that go around transferring of the seller central account, transferring of the IP, managing inventory post-acquisition, et cetera. And having somebody experienced across the table is very important, right? Are you their first trial acquisition? If so, there's going to be a lot of bumps along the road, and it might not wind up in a successful transaction. If you're the 150th, then they're tried and true. They know how to do it. You can have a lot of confidence in the outcome as well. So it's important to start out any engagement and discussion getting this question answered. Question number 2, what's the founder's background? I like to say that all these acquisitions make sense in a spreadsheet, but when it comes time to start to operate them, that's where the rubber meets the road for acquisitions. So, I think there's basically 2 sets of founders in the market, right? A lot of them are have financial backgrounds, whether investment banking or some, private equity, et cetera, and then operational. So, they ran e-commerce businesses, maybe they actually ran Amazon FBA businesses before, et cetera. And it's important because I think the financially, backed founding teams are the ones that, are going to have to build up that operational expertise. And it takes time. It takes time. It takes a lot of trial and error. At Thrasio, we went through it for the first, I would say, almost a year of acquiring Amazon FBA businesses, really building up our kind of what now I believe is best in class Amazon operations. But you have to figure out what works, what doesn't work, build SOPs out, et cetera. And on the operational side, the people that have done it, been there, done that, I think you should have a little bit more confidence in the go forward, shepherding of your brand and your business to new growth heights. Question number 3, can you show me proof of funds? What are your sources of capital? This is really important. Selling your Amazon business or e-commerce business is probably one of the biggest life decisions that you'll make to date, right? I mean, we're talking about millions and millions of dollars transacting in a short period of time. And you want to make sure that they actually have the money on hand, right? We know there's groups out there that are just getting started. Maybe we've heard of people signing up term sheets and then shopping the term sheet to investors saying, hey, I have this deal. Do you want to put in and be a part of it? Right? That's not having the funds on hand. As a seller, when you sign a term sheet, you enter it into an exclusivity period. And if they're shopping your deal on a signed term sheet, you can't talk to any other buyers. And if they're using your term sheet to raise capital, that capital then, it takes months to get the actual capital in the door to be able to transact. So you could be in a very protracted due diligence period of 3 to 9 months. Now, if someone has the capital readily available, that's a whole other story. And, that's just, they have the commitment and the time. And I think it makes sense to actually ask them, can you show me a picture, a snapshot of your balance sheet? Can you show me that you have the cash on hand to actually close the acquisition in 45 days? Secondarily, what are your sources of capital? And, when businesses and acquisition companies and acquisition groups are raising capital, they have a choice between equity and debt, right? Similar, if you're raising with debt, you have to make interest payments on the debt that you're drawing down for your acquisitions. If you're raising equity, those investors have a much different return profile that they're seeking, right? The debt might be just 10% interest or 15% interest, whatever it may be. And all they care about is making sure they're getting their interest payments, and then down the line, obviously, the principal repayment. Equity is much different. They're looking for sizable gains in the actual company, right? So that means that you need to deliver on the operational side of things and show the growth, show that you're building out a team and in an organization that's going to return a lot of value down the line, probably by some sort of exit. Maybe it's selling the entire company to a larger aggregator or private equity or something like that. But it's important because I think, I talk about, I think there's going to be a reckoning next year in the buyout space. You're going to have people that have raised their first round of funding that aren't going to deliver on the metrics that they promised to investors, or they're going to have, a few acquisitions that don't go as well as they initially thought. And they're going to be the success and continuation of the business, and the fund is going to be predicated on the next round of fundraising. And I think there's not a lot, but there's probably definitely going to be people out there that aren't able to successfully achieve that second round of funding. And therefore, that puts your earnouts at risk, et cetera. So I think it's important to ask, can you show me proof of funds, and what are your sources of capital? Question 4, what is your post-acquisition performance track record? Right? Anybody can promise that they're going to do X, but look for the businesses that have said they're going to do X and they've done Y. Particularly, again, as deal structures in this space have performance and earnouts associated with them, there's a lot of value. At Thrasio, we put a lot of value on the performance payments because we've done it. On average, we're growing year one revenues at 156%. Our financials are audited. We've raised, I think, well over $1.5 billion of capital at this point. we're not doing it because of smoke and mirrors. Right? These numbers are the numbers. They're being audited by some of the global leading investors and private equity firms. So I would just ask, what is your track record? Where have you stubbed your toe? Can you give me an example of a business that didn't do well? And we have a few of those, particularly from the early days. I like, this isn't factually correct, but it generally is. I like to say that our first 5 or our worst 5. I think anytime you're doing it, you're building out an acquisition platform and operational platform at the same time. Those early acquisitions are really, is where you're building knowledge equity. You're not probably shooting the lights out from a performance standpoint because you're learning what is the actual machinations you have to go through to acquire the account, and then you migrate it, and then you have to figure out inventory and supply chain, and then you're rebuilding the marketing campaigns. There's a lot of heavy lifting that goes on, and and that's where you're cutting your teeth. So it's important to know where your acquisition will stand in the acquirer's life cycle of acquisitions, right? Again, are you the first? Are you the 5th? Are you the 10th? Are you the 20th? And as you look at performance payments and weight those, I think you need to find out what can I bank on? What do I think is a realistic outcome, right? And weigh those differently when you're looking at offers. We've lost out deals that to other people in the marketplace because we weren't willing to pay up more up front. But I knew in my team, in our heart of hearts, that if they went with us, that the ultimate payout at the end of the 2-year period would be dramatically more than they were getting, because they wanted an extra $500,000 guaranteed up front. We view our acquisitions as true partnerships. And, we love having the founders, stay involved on a consulting basis or just casually or, fully integrated into Thrasio. So I think it's important, and knowing what your priorities are when you are selling. And that leads into question number 5. So what will be my commitment post-acquisition? We've heard some of the funds that are just starting out are actually trying to, if they are financially backed, they're trying to build out their operational prowess. So they are pitching founders to stay on and build out the operational team. Now, is that something you want to be a part of? Or do you want to go use your, specific skill set in building Amazon businesses, which is an amazing skill set and very, very lucrative skill set by evidence of your potential exit? And think of time value of money. If you're selling and you're retaining 20% of the entity, does it make sense for you then to spend the next 3 years building up tremendous equity for the broader organization while you've only kept a sliver of it? Or do you sell it? Do you then go out and start a new business and go out and exit in 2 to 3 years again? We're now in a very exciting position where we're buying secondary businesses that owners had. Now, they were either started at the time or started after, but I think we're on our 2nd or 3rd round trip acquisition, which is pretty awesome to see. So it's really important to have this conversation from the outset. What are our expectations going to be? Are your expectations aligned with what your desire is, and 2, what the buyer's desire and expectations are? I think a lot of people will just say, oh yeah, we'll figure that out. And then you get to the goal line of signing the APA, the asset purchase agreement or share purchase agreement. And then that's the final detail to be worked out. So it's important to go on eyes wide open and have an expectation of what your commitment will be. I think those are really important questions that if you're selling your Amazon business today, you should be focused on. And, partly because we tell the sellers a lot of that during the process, but it's also, important for sellers to arm themselves, as I'm sure they're, if they have a high performing Amazon storefront, they're probably getting reached out to, on a weekly basis by buyer groups, et cetera. So I think it makes sense to, reach out to a few of the leaders in the space, get their assessment. And if nothing else, just to have more conversations and learn about how different people operate and questions you should be asking, and protect yourselves from false promises. They're out there. We know people are making them, and have a skeptic's eye, I think, when you are entering into negotiations, and what is the motivation from the other side of the table. So those are hopefully some questions that I think is important for sellers to think through and ask when they start their process.
Okay, great. Thank you so much, Ken. I think that's very educating for sellers because, first of all, it's a big deal when you decide you want to sell your business. Then the second thing is to start preparing for it. So these questions definitely give some help to all of the sellers watching us right now. So my question is, what do you think? Is there enough information out there that would educate sellers regarding what questions to ask or how to understand better what are the company's capabilities and intentions to buy their business, or there is potential to educate sellers more to make the right decisions?
Yeah, I mean, I think, right, asking around, right, I think there's probably, I would say 200, maybe transactions have happened in the market over the past 2 years or so. So, I know that there's a lot of masterminds, and the seller community is very tight knit in pockets. So I would ask around to friends, other Amazon sellers and forums, groups, etc., on their experience. Right. I think firsthand experience is really important and valuable. And you can, you can go to the websites, you can ask them how many, kind of the questions that I posed. It's hard to get public information about, performance and things like that, just because these are private companies and a lot of them are just starting out. So they probably don't have much of a track record. But you can look at backgrounds on LinkedIn and websites and things like that.
Okay, cool. So what are the biggest mistakes sellers are doing, or what you have seen doing when they are going into the process of selling their business?
Yeah, I think, a big mistake is not having a handle on your, the history of the business and, your performance, right? So, we're going to analyze your profit and loss statement and see what's been the trend in revenues, right, and margin profile. And if you had a huge spike and a dip, or that was out of stock, or our hero license got suspended, or ran out of inventory, or whatever it may be, know the narrative of the historical narrative of the business, and be able to answer those questions. I think the other thing is just be honest. I mean, we've seen it all. I mean, I could tell you, some crazy stories about what's happened to businesses when they are in diligence, right? We had, faulty products, products get suspended, accounts get suspended on the day we're going to close. We've been through it all. We've seen it all. So we don't get scared. We know what it takes to be successful on Amazon. And we also know the risks that are associated with building a business on Amazon. And I think we've done a great job being able to mitigate those risks within Thrasio's platform. But they're out there. So I think, come open hand, we come eyes wide open. We expect the sellers to do the same, and don't try and paint a pretty picture and perfect picture of everything, because we know that entrepreneurship and small business is not that. And, we were founded by founders and entrepreneurs. So we have the utmost respect for what, the businesses that people are building today. And we know that the ultimate win is when you exit and sell. So I think that's when people hide things, that's, it sets a bad tenor for the relationship and the transaction, because we are relying, right? And a seller knows their business better than anybody else, and kind of where the skeletons are buried, so to speak. So, just be completely upfront and honest, and let the buyers, make, the decision with all the, right information.
Okay, very good. So you were talking about your company's first acquisitions as well, that some of them didn't have so good post acquisition performance. So as you were trying to build up the operation side of your business at the same time, what do you think? What was the key that allowed you to, so quickly to improve the operation side and the post acquisition performance? Because you are acquiring a lot of companies and you have to keep up with everything because the businesses actually are different and they run in different ways. So it seems like just a ton of work. So how did you do it?
Yeah, I think, right. So if you're running one Amazon business, right, that is your experience, right? And it might be every Amazon business has its own esoteric like marketplace and, competition and pricing, and it's just very dynamic within itself, right? So we had a few acquisitions. We're like, oh, we bought, one business that was a leader in a burgeoning space on Amazon in a niche that they had kind of carved out, and they basically flew too close to the sun. They went from 0 to 4 million in revenue in 2 years, and it was like great margin profile. Oh, great. We learned that, when you're the leader, there's fast followers in the Amazon marketplace. And if you don't have it's very hard to create a durable, sustainable competitive advantage in products that don't have any real differentiation, right? So now we learn that, and that's a lens now that we look at through every other acquisition, and we say, all right, are they a leader in a niche space? Where's the competition coming? How long will it take for competition to get there on the reviews, et cetera, if you make some assumptions? So it's really, I think, what's allowed us to be successful is those repetitions of taking on different brands and different businesses and different segments, right? So now we've seen a lot. If you can imagine, again, we'll end the quarter probably at 125 plus acquisitions to date from businesses all, different categories and subcategories and marketplaces and leadership positioning and, newcomers and new products being launched. I mean, we're basically a mutual fund, if you will, of Amazon businesses. So something happens here, there's chances that we can then leverage that learning either when we look at new acquisitions or, more importantly, with our existing acquisitions and growth, right? If it's figuring out video ads and we increased our conversion rate by 5 percentage points here. Let's go now blow out video ads across our entire portfolio of brands, right? So I think there's a lot of learnings, and it's you can't read it, you can't hear about it in a mastermind. You really got to live through it and build up that muscle, kind of the Amazon muscle. And I think that's what our operations team, and then you create, standard operating procedures around it, right? Even if it's just dealing with Amazon seller support, like how many tickets has our organization filed over the past 2.5 years, and now it's like, okay, this is the best time. This is what you do if you get this, notice, et cetera, right? It's just tons of repetitions and opportunities to get better. And someone who's just starting out acquiring, they have to learn that themselves. They have to go through the grind of it. And I think that's, having done it now for 2.5 years, I think it has really put us in a great market leadership position.
Mm-hmm. Definitely, especially taking into account that Amazon is quite rapidly developing new tools, new features, especially like during the past year and a little bit more. So definitely when you can repeatedly do those things that others are just like learning or testing, but you have done it already, then it definitely helps you. So as a last thing, I wanted to ask, you were a seller yourself, am I correct?
Yeah.
Yeah. So when you first started your Amazon business, did you ever think about selling it as well?
Yeah. So I ran it. It was actually like a wholesale business. So I didn't start it. I took it over. And that business was really interesting in that, it was early days. So the founder kind of was one of the first resellers or wholesalers on Amazon. And, we had, when I took over running it, we had a team of buyers, and we were kind of had wholesale relations with 300 plus, globally recognized brands. And it was really, this, unique opportunity of finding demand and supply imbalances and ordering inventory in a quick turn. It wasn't, private label building a brand. And those businesses are getting tough, right? The brands, 5-6 years ago, they didn't know how to sell on Amazon. So they were just letting other people do it for them. And now they're waking up that Amazon's presence is they're constantly there, and they need to ramp up. And it's the new reality is you need to know how to sell on Amazon. So I don't think those businesses right now demand a high value in the market, right? Because unless you have exclusivity contracts with all the suppliers that are long dated, or I know there's a few big players, agencies in the market that are doing a good job in helping brands, rein in their exposure on Amazon and all the resellers and back channeling, and that goes on. But yeah, so I mean, if it was private label and it was mine, I definitely would. I think it's important that I always tell people that selling your Amazon business and timing it's like having a child or getting married. There's no perfect time, right? You're not going to wake up and be like, oh, now is the exact time to do it, right? It's a leap of faith. And I think one of the biggest things sellers have is that fear of missing out of what could be in selling. And that's why we've structured our deals to have the performance payments, because, what we saw early days when we started acquiring is that sellers just hit a natural ceiling of capability, right? And it's oftentimes the capital and the size and scale that they've gotten to that is that capability. It's not the founder's personality or their skill set. It's more it becomes a company, right? It's no longer just a few products and a brand on Amazon. It becomes a company, and you got to figure out how to manage your cash flow. You got to take out debt and loans, and then you got to figure out a product iteration and development and launch process internationally, or figure out how to run marketing and advertising on Amazon and not outsource that, right? So that's why we've created this world-class platform that sellers can then plug their business into, and then we take it from there and allow them to participate, which I think is really exciting.
Okay, very interesting. Thank you so much for sharing insight into that word as well. So if anybody has any questions to you or would like to know more about your services, then what's the best way to reach out to you?
Yeah, reach out directly to me on either LinkedIn, Facebook, WhatsApp. I also ken@thras.io, thras.io is my email. I think that we have acquisitions@thras.io as well. Goes to our broader team, and then someone can respond. But yeah, my whole day outside of podcasts is talking with sellers. So I love it. My team loves it. It's it's definitely the best part of my job.
Awesome. Thank you so much for coming here, and we wish good luck.
Thank you.
I do hope that the tips you heard in this video will be useful for you in case you will decide to sell your Amazon business. If you would like to offer your Amazon business to Thrasio, let us know. We'll be happy to introduce you directly. Write to us an email to team@orangeklik.com. You will find the email address below in the description. And now I would like to invite you to watch other videos with Amazon business acquirers and FBA brokers. So you will learn more interesting stuff in case you want to sell your Amazon business.